This episode is brought to you by Newline by Fifth Third. Drive your fintech forward with the embedded finance platform designed for enterprise fintech and backed by a leading financial institution. Discover how Newline can transform your business at newline53.com. The FinTech Takes podcast is also brought to you by Paddle. Need more revenue, more growth, and more time? Over 5,000 digital businesses trust Paddle as their merchant of record, or MOR. Unlock more revenue, more growth, and more time. Get more at paddle.com. Hello. We have a wonderful Not Fintech Investment Advice for you this week. Simon Taylor, author of Fintech Brain Food, and my good friend, has made his return visit, where, as always, we talk about 4 fintech companies that have caught our eye. This week, we get through quite a range of different topics, including AI and compliance, mortgage overpayment in the UK, wealth management and financial advising in the age of generative AI, and why selling digital account opening to community banks and credit unions might not be enough anymore. It was a great conversation. So without further ado, Not Fintech Investment Advice. Okay, Simon Taylor, author of Fintech Brain Food and thinker of deep fintech thoughts, is here. Simon, you look a little tired, maybe rough around the edges, but enthusiastic to talk about fintech as always. How are you, sir?
I'm excited to be doing this show with you, my friend. I've had one of those weeks with a lot of travel, a lot of fire drills, a lot of last minute stuff to do. And yes, we've still got home renovation going on. This is my oxygen. This is talking about fintech companies with Alex Johnson. I could not be in a better place. And, I just can't keep up with the news in fintech anymore. There's too much. It needs to stop. Let's just talk about some little companies instead. That sounds fun. How are you doing, my friend?
That sounds fun. I'm doing good. Similarly overwhelmed, although I don't have a renovation that I'm trying to live and work through like you do. I honestly can't imagine going back to those days. I've done the renovation with little kids thing before. And, I remember this was when my eldest son was very little, like maybe 2. And we would come downstairs and he would sort of get up early and kind of sneak out of his bedroom. And we would come downstairs in the morning at like 6. And he would be like halfway up a ladder that one of the contractors had like left there, just climbing up the ladder. And there's like a power tool over here, and there's other things over here. Like, I mean, it's just chaos, and there's a limit to what you can do to manage it. So my deepest sympathies to you for all the things that are happening. But perhaps this can be an oasis for a few minutes where we talk just fintech, and we don't even have to get into like Meta and Stripe and all of these things that just won't slow down. Let's talk about, the maybe quieter, less heralded corners of fintech. Does that sound like a plan?
It does. It feels like a cozy chat. This is cozy fintech right here. Definitely.
That's right.
We're playing Animal Crossing. We've got lo-fi hip hop on. We are as cozy as it can be.
I love that. It's funny. That is what you just described as my wife's like aesthetic. Everything like cottagecore and like cozy is just how she organizes her life. So very familiar with that aesthetic. And let's try to channel that over the next 40 minutes or so. Simon, as we typically do when we play our game, we have some companies to talk about. Would you like to go first?
Yeah, right. Why not? This one felt very Alex Johnson. Even the name is cozy. It's called Cardamon.
Oh, that is cozy.
Isn't it?
Yes.
So they are an AI-powered compliance copilot that automates regulatory mapping for product launches. Launch new products, enter new markets, stay compliant 10x faster is kind of how they pitch it. Now, interesting. You want to launch new products. If you've never done it inside of a bank before, it's really, really hard. So they will do things where they'll create a full evaluation of all of the obligations for this product, create an impact assessment, and then recommend a series of controls. And then you can assign a person to then own that mapping. They support the UK, the EU, and the US. And they're focusing a little bit more on brokerage and digital assets. So they're going to where the growth companies are. And I just love that through line of from compliance to regulation to product to control. I mean,
Yeah.
that is an industry of people. I wrote a piece called The Compliance Iceberg a few months back, and
Yeah.
Global Group Risk and Compliance, GRC, is all about mapping. Like, where in the law does the
Yeah.
legislation hit the rule, and where does the rule hit the policy, and where does the policy hit the product, and what's that through line sort of look like, and how are you going to keep that through line once it's live? So AI would be perfect for this if it never hallucinated and had some context. So
Sure.
training an AI to be consistent in this, to build an audit trail, to ensure that there's like one human who's accountable, like the throat to choke,
Yep.
just seems perfectly pitched. And that skill of automating some of these workflows, that skill to have enough context about the problem is like the amount of people that are really great at AI and really understand this problem is very, very small. So I think they've found a niche within a niche, and they're called Cardamon. Like, what are your thoughts? What say you?
Well, I like the name, first of all, as we talked about. This seems really intriguing. The thing that it makes me think about is, I talk to a lot of fintech companies. I know you do too. A thing that comes up frequently is, hey, we're going to launch this product. And it might be taking a product they already have and know into a new market. It might be expanding their product set within an existing market. But, I think the thing that you don't realize until you build in financial services is, normally the like product development lifecycle starts with like, all right, let's map out a customer need. Let's think about how we can sort of solve for that customer need, how we can do it in a differentiated way. Okay, now let's work our way into business model and unit economics. How are we going to make money on this? And you sort of like start from the customer and work backwards. Not that customer-centric thinking isn't important in financial services too, but very early in the process, you better map out how your product fits within regulatory compliance buckets, right? Because, I think one of the things that confuses people about financial services is they sort of wonder, like, why do all credit cards kind of look the same? Or why do all brokerage accounts kind of look the same? Or, why do all installment loans kind of look the same? Well, the reason fundamentally is regulations draw a box around different product structures and have very specific requirements for products that fit into those boxes. And the thing I've always noticed, Simon, is fintech really thrives when it finds ways to kind of blur the lines between those boxes for the benefit of customers, right? So like, here's a debit card,
that's the crucial bit.
It also has a little bit of lending attached to it, or here's a brokerage account, but it also kind of acts as a cash management function. Like, there are ways to blend product categories together from a customer value perspective and a competitive differentiation perspective that's super useful. Here's the cost of doing that. You are going to run into all kinds of thorny compliance issues. How do you solve those compliance issues today? How do you make sure that you're not going to step on, the third rail and get electrocuted? You pay lawyers a ton of money, right? So if you think again about this workflow and where the process starts of launching products in fintech, it usually starts with paying a law firm who knows these things an extraordinary amount of money to help guide your product development process through these different boxes and through these different regulations and policies, and figure out like, okay, this is going to be regulated as a debit product, but for this part, we need to sort of carve it off and treat it like a credit product, and like helping you map that out. As you and I have talked about many times on this show, Simon, AI is going to suck a lot of money out of law firms, right? And so to me, when you were describing like, regulatory mapping for product development, in my head, I was thinking, boy, this is going to bum out a lot of these niche financial services law firms that know how to guide product development around existing regulations. You mentioned that they're supporting the states, the US. The US is a thicket of all of these different regulations, right? Because it exists at a federal level. You have to then navigate every one of the individual states. Like, that's a lot of billable hours. And I think the idea of being able to take away some of the margin of those billable hours, even if you need a lawyer towards the end of the process to like certify or help you figure out some of the end bits, even doing the initial mapping so that you spend less time with lawyers and spend less on billable hours, to me, that's a huge value. And then I guess flipping it back to you, the other thing it sounds like what this does is it kind of ties together policies and controls with the mapping that you do, right? And so it gives you a good starting place for not only knowing how do you build a compliant product, but how do you operationalize and manage that product in production from a controls and a compliance perspective. And again, like, not that you're not going to have humans involved and not that you're not going to have other things that need to get brought into that, but even be able to do a first pass at that in a quick automated fashion sounds pretty intriguing.
Yeah, and the only thing you definitely need is the human that's accountable. And that
Yes.
little detail listed right up front just spoke volumes to me that these people know what they're talking about in compliance, because you don't have that little detail in there unless you've done this before. The other contrast I draw is like the fintech company that pays the law firm a lot of money, or there's the bank or the large financial institution that has a centralized compliance function somewhere else that you have to submit a SharePoint request to get somebody assigned who might look at it in 2 weeks and then doesn't look at your project again for another 6 months until unless they're sort of like one of the good ones, and they will give you their time. If they're one of the militant ones, which is like, without a SharePoint request, I don't show up, which does happen. Then you'll get 6 months down the line, 12 months down the line, you're running through your new product approval process, or NPA. And this is where you have to line up all of the stakeholders in this high stakes meeting in which everybody needs to not object, risks need to get signed off, people need to put budget aside in order for the thing to go live and into production. And anybody can throw a hammer in it. It can become political. It can be kind of all sorts. If you don't have your target operating model in place and including all of your policies, procedures, controls, you're never going to get through this thing. Never mind all of the other corporate politics, budget politics, and other stuff going on in the background. So to have that is a huge help. And then my experience has been, oh, and by the way, you want to automate some of this stuff once it goes to production. You don't necessarily want to hire 20 people. You want to hire 5. Well, having policies and procedures are such a great unlock. I think we've talked about this before, but like, to an AI agent, a policy document is like beautiful context. Hi, I'm an alien from another planet. I am a super genius. I know a lot about the universe, but I know nothing about what you're trying to do. So please give me all of the context about what you're trying to do. Oh, I wrote it down for you in this policy document. Great. I can work these cases and I can implement these controls for you because you've now given me context. So Cardamon is like a front end, and then AI agents that you can train with those policies just feels like a really interesting workflow and where things can go. So interested in who you think would adopt this and your prognosis. And is this Alex enough?
It's totally Alex. Yeah, this is very Alex. I appreciate you bringing this one to me, Simon. Yeah, I mean, I think that you make a good point about this being relevant to both fintech companies and banks, right? Because there are different versions of the challenge, but it's roughly the same thing, which is someone is going to be accountable for making sure that this looks good and is compliant with the requirements that it needs to meet. But essentially what we're saying is, if there's a thing that you can use to do a lot of the homework and the prep so that that conversation goes better and faster and gives either an external law firm or an internal kind of policies and procedures and legal team at a big bank, if you are giving them all of the things they need buttoned up very clearly and they can like trust to a certain degree that some of the pre-work has been done, that just dramatically speeds up the process. And then I love the point you make about sort of automatically generating policies for other AI agents to then use when building automated processes for production. You know, it's funny, a thing I've had to learn kind of the hard way, honestly, as I personally have been playing around with AI and these reasoning models, is it works way better when you think in terms of breaking a task into discrete parts and having different AIs or having different prompts sort of running each one of those parts that then build on each other, right? Like where the, I think, area for most error creeps in is when you try to build a master model that can think through the whole thing in one big go, right? Because there's just too many different jobs that you're asking it to do within one single request. Whereas if you have Cardamon, it can generate the policies, which can then obviously have a human in the loop and can kind of review and sign off on things. But then those policies act as the context for the next agent that comes in to do the next part of it. And then they output cases, and the cases become the context for the AI agent that reviews all the cases in order to figure out which ones to bring to a human. So it's like layers of models creating outputs that are context for the next model in that chain. Like that manufacturing process makes a lot of sense to me. And I could see this being relevant to both large banks, as well as probably not as much, although still relevant, like small startup fintech companies. But I was thinking like scaling fintech companies that are one region going to another, or one core product and are diversifying that product set, because that's where a lot of the efficiency and savings and automation can really be valuable. So no, I think this is intriguing. I'm kind of surprised actually that I haven't seen anyone else take compliance like mapping and like product development as sort of a core focus for AI, given the number of AI compliance startups that I think you and I have both seen. Like this feels a little novel in that space, which I'm impressed by.
Yeah, I think I've seen one or two others. The names kind of escape me. There's one called Blueprint, which Chris Brummers of DC FinTech Week has created for MiCA compliance. Somewhat similar, but somewhat different, a little bit more targeted. But I've heard this wonderful phrase, agent swarms, which is like lots of agents swarming together. This isn't really what's happening. What you're starting to see is people using different LLMs for different tasks, and then putting those together with really good software and workflows and Zapier and NAN, and that's the kind of a real skill set that's what's under the hood of a lot of these startups. And it's very, very hard to do, to get the prompts right, to have the consistency, to feed the various different LLMs. Something we found at Sardine, for instance, is that right now, Gemini is the best model in the world, maybe bang for buck on OCR. Tied with Mistral, but like it can do a lot of that sort of stuff out of the box absolutely incredibly. Versus for your rationale and your thinking through, you might want to go to an O3. For something else, you might want to go to something else.
Yeah.
And exactly that, building the workflow where, we're in production with clients where the first line is like reviewing a step-up KYC alert, the first line agent, and then somebody's reviewing that. Then the second line is doing all of the analytics for the consistency of what's happening and all of the policy building and all of the auditing. And this is already live. That's already in production. That's sort of further downstream stuff. But this upfront policy development, I think, is really special. So good luck to these guys.
Yeah, no, I wish them a lot of luck too. It's I think this is needed. I also think, just real quickly, the other thing this ties into is this discussion about how regulators can start to use AI more. And I really do like the idea, and this kind of gets into like APIs between different models and the ability for models to kind of talk to each other and build off of each other. But I would very much also like to see more of an AI-driven approach from regulators in terms of how they provide context to fintech companies or banks that are building products in their jurisdiction, right? So like if you go even further upstream, so there's probably a whole set of other things, and I know some folks are building in that area too, but yeah, it's the entire product development value chain in financial services sort of being refactored with AI. Simon, I'm going to give you a company that I didn't necessarily think of as a Simon company, but given your geographic location, I think it kind of is. Are you ready?
Ooh.
This is a UK fintech startup called Sprive, Sprive.
I nearly chose these guys.
Did you? Okay.
Yes.
All right. So you know them really well, so I'm not going to overburden the explanation here. But for the audience, I was looking at them and I kind of think they're like a combo of Cash App offers, Acorns, and Tally, right? So it's like a little bit on the front end, this experience for consumers of, hey, here is a discount or a cashback offer for shopping at a specific retailer or supermarket or store. So it's sort of that integrated shopping discount functionality up front. It's a little bit like Acorns in the sense that it takes the money that you save on all of those cashback offers and discounts that you're using and squirrels it away for some other purpose. And then it's a little bit like Tally, RIP, in that it then applies that savings to debt repayment and sort of an optimal debt repayment strategy, all of this is focused on mortgage repayment, right?
Yes.
And so the goal is to essentially help UK customers pay off their mortgage faster. And this strikes a particular chord with me because this is probably something that my parents just hammered into me when I was like young, but I am very much obsessed with paying off my own mortgage early, kind of as like an achievement, financial life goal. Like I want to pay off my mortgage early. And, it's funny because, and I've written about mortgage servicing a lot, there's actually a pathetically small amount of infrastructure that exists around the post-origination mortgage servicing world, right? And so there really aren't a lot of
worse in the UK.
I totally believe it. And I want you to elaborate on that because, like, in the US even, you set up your mortgage payment, it gets auto deducted from your account. You do have the ability to go, oh, I'm going to increase it by this amount, but there's no way to like vary that or make it automated or make it like based on if you have extra cash flow, just send more to your mortgage. Like none of that more sophisticated infrastructure, which we see in savings, investing, credit repair and credit repayment optimization. We see it in a bunch of other areas. It doesn't exist in mortgage. And so I thought this was a pretty cool focused play to do that. The way that Sprive makes money is after they attract these consumers who want help paying off their mortgage faster, they then use that as a lead funnel for remortgage and helping those customers find a new mortgage, which again, you can elaborate on this, Simon, but you guys don't have 30-year fixed mortgages in the UK, so I would imagine there's a little bit more of a challenge around refinance and like figuring out what you're going to do once your loan is up. So to me, this seems great. I would like it in the US, but in the UK, based on what I know about that market, it seems like it's an even better fit.
Oh, it's huge because you refinance every 2 to 5 years. So we're on a 5-year at the moment. Typically, the rate is stronger, unless you got into a 10-year a few years ago. But even then, like it just, especially during the ZERP era, the market really shifted down towards the 2 and the 5-year because you just have such a wild incentive. Like the difference was between like less than 1%, just over 1%, 1.25, and like 4 on the 10-year. So the incentive was just not there to do one of the longer deals. And then in the mortgage application document and contract, you have the right to pay something up to about 10% of the total loan to value of the mortgage, like of the outstanding on an annual basis. I mean, that's years off your mortgage and in interest payments. It's a massive amount. And culturally, we're very used to trying to overpay into our pension, but we're not used to trying to overpay into a mortgage. And I believe the friction to do that, like you have to have it drilled into you as something you want to do. And my wife is one of those people. She's like, gotta overpay. A bit like yourself there, and that's surprisingly rare. Like it's an incredibly rare knowledge. So the solution here is simple: build something engaging and useful right now. And that takes away the admin. It's engaging and useful right now because it's saving me a little bit of money. It's doing the PFM. My fear with this is it's still targeting the people who would have kind of done this anyway, and it's making their lives a little bit easier. So I don't know that you have a right to win as the engaging cash-saving app for the person that would have done this anyway. I think they'll use the product because it's helping them find extra money, the found money thing from Acorns to go towards the mortgage. In fact, my wife is a customer. Like, yes. But when it comes to remortgaging, sorry, but it's still something where that broker can probably shave off a little bit more. And, if you are a value-based customer, whenever I see one of these features that looks, businesses or products that look like a feature, I want this inside of every other neobank.
I was thinking about that too.
Why isn't this a feature in Monzo? I think the answer to that question is shipping velocity of being actual bank. It's
Sure.
still slowing them down a little bit. Revolut wants to get into mortgages. Maybe they'll do it. But in terms of like a UK bank or financial institution, if you are lending mortgages, this is potentially reducing your overall profitability from that mortgage book. So there's an incentives problem there that I think is really, really hard. So there's like it falls into that PFM ditch of the only people who would use it are the people who would do it anyway. So what's your business model? That's my worry. What say you?
Yeah. No, that's totally fair. I had the same like business or product feature thought when I saw it too, right? Like a lot of, it's funny, but this is why I'd be a bad, this is why it's not fintech investment advice, Simon, because the things I like most are often these really cool features that have like a challenging business attached to them, or the path forward from a business or an acquisition perspective is less clear, but the feature is like, oh my God, this should exist everywhere. So I share that concern. I think to sort of add to it, the other challenge I see with a lot of this, and I was poking around their website and kind of looking at how they present this, and it seems like they do a lot of work to try to make this clear for people, but it's really hard to get people to understand just how massive the financial benefit is of shaving some time off of a long-term loan with huge dollar values attached to it, right? And so like the difference of, and I'll just use a US example, but like the difference of paying off your mortgage in 30 years in the US versus 25 years is tens of or hundreds of thousands of dollars, right? Like it's an insane amount of money because, you know, you're paying off the principal and interest. And the more principal you can knock out earlier, like you are saving yourself a tremendous amount on interest costs. And it's really, really valuable. But that's such a hard thing for human beings to like wrap their brains around, is like, oh, you know, 70-year-old Alex will be really happy that 35-year-old Alex made this decision to shave off a bunch of interest that they never ended up paying, right? Like the benefit is so theoretical and sort of future facing that it's really hard, I think, from a behavioral science and design perspective to bring that benefit to the here and now, unless you've had this drilled into you by your parents, which I have. It sounds like your wife has. Like there are those of us out there who think this way, but if you're not that way, it's really hard to get people to care about that benefit. Now, I will say on the flip side, I do like tying deals on shopping to this. I thought that was an interesting way to do it, because I would have assumed the more obvious way to do this would be, oh, we'll just, remember Digit in the US that would squirrel some money out of your checking account to build up savings? I was kind of thinking it would be more like that, where it's like, we'll just squirrel some money away, or,
round up,
you know,
found money.
Acorn style, we'll round up. Yeah. And like, that's one way to do it. But I don't think that activates the same like circuit in your brain of like, oh, something good happened. Whereas deals or cash back, I think, do potentially. And so I wonder if the way forward is for them to build more of the front end deals, cash back kind of mechanisms. And maybe this becomes something that's broader than mortgage, right? Maybe mortgage is like the first one that it starts with, but maybe it can also go towards paying down credit card debt, kind of tally style, or putting money towards, you know, a tax advantaged account for buying a home in the future, or for children's education, or any number of those things. So I wonder if it's more of a general infrastructure tying savings and deals and cash back to routing where you want those savings to go, and mortgage is just one of many choices. That would be kind of an infrastructure path to go down.
Yeah, it's engagement at the front. What is the most engaging thing for which ideal customer profile, and how do I channel that attention towards something that's economically beneficial to you? I think that is the killer question here for me. And I really do want to see this become something that becomes a feature for everybody. A bit now, like how now managing your subscriptions has become like kind of standard. Even some of the big banks now offer like subscription canceling inside their app. Like I think MasterCard offers that feature out to its issuers.
Right,
like,
right. Even though none of the companies that like pioneered that really are still around or are thriving, but they contributed something to the ecosystem.
And then you saw this wave of infrastructure companies who do that for banks and for fintech companies, and they did okay, but then they got acquired, and now it's just a thing that MasterCard offers or whatever. Like, great, fine. but the user still got it. And I think this would absolutely fit into that category. But if you didn't have anything else on this one, I do have another UK company that almost segues perfectly from this.
Go, make it happen.
So the company is called Figg Wealth. Figg Wealth. So Figg. Now, it's an AI wealth and banking dashboard, sort of like the ultimate PFM. So this is, and you've probably seen a few of these in the US, but there isn't one in the UK that aggregates everything into a single app. So this is your cars, your property, your bank accounts, your savings, your stocks, your crypto. I have not seen anybody try and do that in the UK at all. And that's partly because our open finance infrastructure is so incredibly poor, but also because people haven't just done the thing, which is like, actually, there's a database of automated valuations that you can plug into for housing. There's a database of automated valuation that you can plug into for cars. Nobody's just put it together. This is that. This is the first time I've had a real solid estimate of net worth. And what you can do with that is start to cross-sell products and make recommendations for what you could start to do it. Because life is so messy. And I think a lot of people have tried to pull this off, but the app can value items from things like handbags, photos of handbags, photos of cars, photos of properties. So you can really start to use some of the AI image capabilities in here to do stuff. Like, imagine selling insurance off the back of that. Imagine selling financial advice off the back of it. Imagine building a strategy for somebody that says, actually, you know what? Yes, you should also be putting away some for your for your pension, but you should be paying this down and pay it down in this order. And here's your waterfall. They've got something here that's really nice in the take a photo of the thing and we'll add it to your overall portfolio. That got the wheels turning in my mind of like, imagine what you could do if you just took that concept further. Imagine if you could take the photo of all of your contracts and your bills and you could forward it the PDFs that come into your emails. I think so many people have tried to build this company and so many people have failed to monetize it for all the reasons we talked about. It's a feature, not a product. But the insight to me was how powerful AI makes the front end of the wealth manager of tomorrow. And I hadn't personally experienced anything that had done this aggregation this well in the UK before. I don't know if you've experienced anything in the US that comes close to actually being able to aggregate your net worth.
Looking to grow your fintech with scalable API-enabled payments? Newline by Fifth Third empowers enterprise companies to accept and process payments seamlessly. Effortlessly launch and scale payment, card, and deposit products directly with Fifth Third Bank. Learn more at newline53.com. Do you need more? More time? More revenue? More growth? Software companies are born global, but the complexity of selling worldwide can be overwhelming. Managing payments, sales tax, fraud, refunds, these things slow you down, but getting them right is essential. That's why over 5,000 digital businesses choose Paddle as their merchant of record, or MOR. More. Complete sales tax compliance globally, multi-currency payments, fraud protection, billing support, all taken care of. With Paddle's MOR model, you get more. More time, more revenue, more growth. Learn more at paddle.com. Yeah, it's a great question. I mean, we have, it's an odd week to say this because open banking is like getting killed right now in the US, but we do generally have, I know. We do have a generally pretty good breadth of open banking capabilities. So I think there has been more progress in building like the dashboard of dashboards to pull wealth and assets and liabilities and cash deposits and all kinds of different things together. Although, there's always more room with breadth, right? Like taking a picture of a handbag, being able to, forward along contracts or investments, just like the range of someone's actual assets is probably a lot broader and more diverse even than the most sort of aggressive PFM company has sort of figured out. The thing it makes me think of is, who's really good at this in a completely non-technology driven way is the people like Fidelity, right? Like I went through this exact thing with Fidelity not that long ago where they're like, hey, do you want to have a sort of complimentary advising session with one of our wealth advisors? Yeah, that'd be great. Okay, well, here is a form, a digital process to go through where we are going to get all the information we need from you about your finances. And Simon, it was so much paperwork to fill out. Yep. It was like, here's all these things. Connect these accounts. Do you have anything over here? Okay, yes. What is that? Plug in the value here. It asked me to do a tremendous amount of manual work to give everything that I could to this system to organize all this data. And then what happened is the data all got outputted into a format for this advisor to review and then walk through with me when we were having our conversation, right? And it occurs to me that perhaps the reason that we haven't done as much work on the front end to streamline that process of getting a full view of someone's financial life is the only resource we've had on the back end to make use of that information are human wealth advisors. And so there's naturally like a limit in terms of the market size you're addressing if the thing you have to pay for on the back end after you've gathered all that data is a really expensive financial advisor who is not accessible to most people, right? I don't have a regular financial advisor that I sit down with every quarter. This was just kind of a one-off thing. Most people just don't have the time or the access to do that. Thus, there is no reason to ever try to aggregate all of the information about someone's finances. But as we talk about often in the show, AI sort of changes the parameters of that, both on the front end and on the back end. So on the front end, hey, instead of having to like fill out this pain in the ass form where you pick out the model and type of your car and the year and you just sort of do all this stuff, just go take a picture of it and AI will figure that out much easier. Like connect your Zillow account and the property that you've claimed, we'll just plug that in and we'll go pull an automated valuation for it. Like the ability to automate and make intelligent the data gathering opens the funnel up for more people to go through that. But I would imagine, and correct me if I'm getting this wrong, on the back end, they probably also want to apply AI to be the thing that's helping to provide financial advice and analysis, which is a much more accessible replacement for that financial advisor. So it's like, I guess the point I'm trying to make is there's no point in opening the funnel at the top wider if the bottom of the funnel is still incredibly narrow and expensive. But if AI can open up both the top and the bottom of the funnel, now we're actually moving more people through the wealth management journey.
I've seen, I think now that I'm remembering, there was like a company called Coho in the US that was attempting to do something similar. There's been a few others as well, but they didn't do the taking a photo of things, just forward the email thing. So I think that to me was unlock number one. Number two, when you're actually in the app, some of the insights about that asset, here's why we think this is worth this much money, because it's this type of handbag, it's this type of it's this whatever. It gives you a rationale, which again is kind of interesting in its own right. And then it's only gone as far as providing insights, but it will take stuff like, let's say you had a really big position in one company that you used to work for that's publicly traded. It'll give you market sentiment about that company and like a sort of very nice summary of analyst projections and and it will surface why it thinks that's important to your net worth and any action that would be best practice. So they're staying very much in the best practice guidance thing. But here's the other thing that's interesting about the UK. The FCA is back. Like the regulator was asleep for a little while. They were getting like budget killed. A lot of folks ran out into the private sector. Some of the best talent the FCA has ever had is all over the private sector at this point. You probably see a similar thing happen in the US.
I was going to say, you're describing my life right now in the US. Simon. Yes, that's exactly what's happening.
They're all flying out.
Yeah.
There's 95% of the CFPB that's up for hire, and there's some good talent in there, no question.
They're amazing.
And so the FCA's competition mandate and their openness to innovation means that you could start to see them moving the needle forward on this. And there was a time in 15, 16, 17 when at first the FCA going to the US and sort of like saying, hey, we figured out this policy, was met by a typical exceptionalism that said, no, but you're not in America. We have federal and state. It's hard here, which I hear a lot, funnily enough. And then now it's completely flipped in that, like, there's probably an overperception of the UK's regulator, but it's sort of coming back, and there's a much better transatlantic peer level conversation. And I think there's a real hunger for things in this administration at the policy and the regulatory level that would help them be more efficient and would potentially solve upcoming problems in the market. The one advantage, I suppose, is innovation hubs are making a comeback, and the space to do things that might be good for a customer but might be a little bit more innovation leaning are potentially open, and the aperture to that is open. So maybe if there's a regulatory framework starting to shift a little bit, you could go beyond just like notification, hey, you should be putting more into your, or best practice would be to put more. And you could get into, you should probably move it into here, push here to do it. Like that's kind of where this thing becomes huge. Then it's sort of private banker in your pocket, which we've been dreaming about forever. But I think we might be getting there.
It'd be amazing. I mean, just the just as a super quick plug, and maybe this can be sort of my manifesting thing, even though I still have one more company to talk through, but just to manifest an idea really quickly, could we have agentic private bankers before we have agentic commerce? That's a question, a request, a wish on my part, because I like agentic commerce as much as the next guy. Very excited. I too want to found a fintech company someday and just rake checks in from VCs with no due diligence at all. So like I can appreciate agentic commerce, but like agentic commerce is functionally, particularly from a more of a consumer small business perspective, like how do we help people spend more money? Not necessarily how do we help make better decisions? Like candidly, Simon, I don't have a problem with e-commerce. I'm great at e-commerce. I dominate e-commerce. I spend way too much time and money on e-commerce. I don't need agents helping me become even more efficient at doing that. What I need agents helping me do is the sort of unfun parts of financial services that I probably know I should be doing, but don't take the time to do. Do that on my behalf autonomously. So how about agentic private banking rather than agentic commerce? That's my little manifest, if that's okay.
I'm here for it, man. You will allow. We should probably get to your last company.
Let me run through it real fast. So my last company is Glide, which just raised 15 million Series A. They started out as a neobank, interestingly, and then very quickly pivoted to selling the infrastructure they built for digital account opening and loan origination to community banks and credit unions. So they sort of sit in this technology vendor to community banks and credit union space in the US. Simon, as you know, that is a very large and very populous segment, dominated, of course, by the FISs and Jack Henrys and Fiservs of the world, but also many, many other smaller, more point solution providers for digital banking, for exactly this, digital account opening and loan origination, for PFM. There's all kinds of different point solutions that all then are built on top of a core, right? So where Glide fits in is kind of in that middle layer of the stack where they integrate with the core systems on the back end, and then they tie into the digital banking front ends that community banks and credit unions use. And the goal is basically to digitize and kind of continue to speed up the digital account opening and loan origination process for these financial institutions, which even still in 2025 are oftentimes very bad, very frictionful, very slow, and oftentimes require manual intervention from people. So they are continuing to try to speed that up. The thing I find interesting about this, and what I wanted to get your quick take on, is I am very curious because there's certainly a need to help community banks and credit unions sort of up level what they're doing in order to be competitive, right? I mean, just we talk about it as like table stakes all the time, right? Like if you're not at this level, you're just not going to get consideration from a whole segment of customers in the market. And that's not just consumers or Gen Z consumers, that's older consumers, that's small business owners. Like this is the floor that you have to be at. We have to get you to this floor if you're going to survive. And I will also say, speaking to a lot of community banks and credit unions, they despise the legacy core providers. They don't trust them. They don't think they can get what they need from them. So they're all in on working with other providers to try to up level those things and try to succeed. The thing I'm curious about is I don't know that just digital account opening and loan origination by itself is enough of a like vertically integrated offering to be able to really stand out and help change the trajectory of the success of these businesses, right? I got my start in my career working for a company that sold digital account opening and loan origination, but we sold it to big banks, right? And this was 20 years ago when big banks weren't as good at that as they are now. But the benefit we had was we were helping to digitize and automate processes for the banks that were in a position to win in the market, right? So like we were sort of hitching our wagon to a star that was probably going to like go somewhere and was going to succeed. I think the challenge from a community bank and credit union perspective is even if you help them digitize their digital account opening or their loan origination processes, that by itself doesn't give them a right to win. It's just table stakes, right? It just brings them up to the floor.
You just catch up.
You just catch up, but you're not like jumping ahead. And so I guess the thing I'm curious about is what can vendors that work with this segment of the market, who I really want to see succeed, and I want these financial institutions to continue to be around, what can you offer them beyond that not only helps them like get to that floor, but helps them differentiate themselves and earn a right to win relative to fintech companies or bigger banks? If I had an answer to that, I would not be doing Not Fintech Investment Advice. I'd be founding that company. It's a hard one. But when I look at these types of providers, that's the question that jumps to mind for me.
Yeah, I think they're selling what their customer is ready to buy.
Yes.
And I suspect, given they've just raised a $15 million Series A, according to the Google machine, that they must have a customer or some traction. If not,
they've been
I need to
fairly successful with credit unions in particular. It sounds like they've signed up. I think I saw like a dozen plus credit unions since they made this pivot fairly recently. So there is demand.
And there's demand and there's revenue.
Yeah.
How scalable is that? And I mean, how many vendors are there serving this segment, selling this product?
Well, and there's 4,000 of these like banks and credit unions, right? Like there's 4,000 of these banks and 4,000 of these credit unions. It's hard to get to that market efficiently, right? Like how are you going to distribute what you're doing?
And I wonder if the investor thesis is this thing's going to get acquired and by one of the big processors, and then we've got an exit sort of nailed on,
which is always what happens. They always eventually get sucked into that vortex. So
and like those companies probably have 6 things that look like this already, but this is the newer one. And I'm sorry if I sound cynical, but I just see a lot of this, and I think that's the why you ask the question you do. I guess part of the answer is it doesn't need to help them have a right to win because they're not buying a right to win; they're buying a right to survive. And,
that is a good way of putting it.
And
I wonder if that's the core problem, right? Is like if your target customer is buying a right to survive, you are barely, as the service provider to that company, going to survive yourself. I think is kind of the critique I have.
That's my fear.
Model.
That's my fear.
That's fair.
That's my fear, and it caps your upside.
Yeah, well, and to your point about this, like an interesting contrast to this is, and this space had its problems. So I'm not trying to like say it's like the best possible example, but this is what banking as a service middleware platforms did, right? Is they went to community banks and said, here's a right to win, not just to survive, but a right to win. If you have a tolerance for taking risks and you want to actually grow and not just stay on the M&A treadmill and someday get acquired, like if you want to really like win and have a path forward, here's your right to win. Buy this platform, get into embedded finance, get into banking as a service. I guess what I'm kind of wondering is what's the next right to win that kind of fits into that same banking as a service category of like, for community banks that want to take a risk, here's the
I hate to
infrastructure
say
you
it.
need to do this thing. Yeah.
You know the answer to that. It begins with S and ends in able coins. It is. I mean,
that's so funny you say that. I'm actually working on a piece on that right now.
It's a giant walking, talking AML fine waiting to happen. But if you can go into it with your eyes open to that, that is a solved problem, right? Like, anti-money laundering inside of crypto is an extremely, extremely mature, and fraud detection is extremely mature. Supes was doing it at Coinbase in 2014, 15. There are lots of people in the industry that have been doing that for a while, but where is Stripe going to hold its float? Where are Bridge going to hold their US dollar float? Just giving bank accounts, just being part of a deposit sweep network that accepts stablecoins, like, yes, from a distribution standpoint. Conrad at Claros had a great chart that he put on his LinkedIn, which was the hockey stick of return on equity and return on assets of all of like the Pathwords and the Bancors and once they got into it with a right to win. So I guess it comes down to management risk appetite, management imagination, and kind of management willingness to learn. If you have those three, especially that last thing, then you can go ahead and get into it. There may be regulatory consequences because the uncertainty right now is ridiculous, and then you throw going live in 101 countries on top of that.
Yeah,
the former banker in me is like, it's terrifying.
No, I feel the same way.
But if you did need a right to win, that's certainly one of those things. I manifest one thing and one thing only. Which is if you are a bank and you are getting into a new right to win like stablecoins and you don't want to just do sort of digital account opening, spend a lot of time on the compliance, do your homework. Let's learn this lesson. Please.
Oh my goodness. Yeah, you should see that. For those watching the video, Simon is like almost on his knees begging for this to happen, which I completely agree with. Not to touch on all of the like big news that's been happening in this space this week, but I had the same reaction, which is like, sounds great. How are we making sure we're handling KYC, AML? How are we making sure that we're managing all of the conflicts? Like just because we're in a different regulatory environment doesn't mean those same requirements don't exist. And, we saw this in the last time this kind of like boomed the other way, where you go from like an utter unwillingness to play in this space to like a reckless desire to play in this space. And you have to kind of hold the line in the middle and go, no, this is an opportunity, but we have to do it in a careful and serious way. So I think that is a wonderful thing to manifest. Simon, I'm also going to manifest for you more time in your day and more sleep and less stress as it relates to home renovations. I hope you turn a corner there. And can we count on seeing you again next month?
You can count on seeing me again next month. You can count on going to fintechnodecon.com if you want to see me in person. And of course, Alex Johnson in person.
I'll be there.
And lots of fintech companies. So if you like all of this stuff, go get your ticket now. And I appreciate everybody that already has. I'm very impressed by the Fintech Node community. Alex Johnson, sir, it is a pleasure talking to you. Thank you for having me.
Thank you. Thank you for listening to this episode of FinTech Takes. Stay up to date with emerging companies and the latest FinTech trends by subscribing wherever you get your podcasts. And if you love FinTech Takes, please tell a friend.